Identifying value in the market. This is our second lesson in the Forex profile course. And as usual, we will need to have you take a look at the disclaimer and spend a few moments to read it. So please pause the video and read it. Now, we will get into the course, and let me just review quickly some of the things that we discussed in Lesson 1. We talked quite a bit about auction and auction markets. And this really was the foundation that leads to this discussion about value. Value where? Well, value in the auction market. And we talked about some of the key elements within the auction market. We talked about the bid and the ask. We talked about the participants. We talked about time. We talked about price. We talked about volume. Now, we introduced some of these concepts in our first lesson. We will elaborate more on some of them as we go along. And certainly, if you have some questions, feel free to email them to me, and I will address them for you. Now, though, in this lesson, I have a question that we need to look at and address together. What is value, and how in the world do we identify fair value in any market? Well, naturally, we're talking about Forex and currency pairs, but regardless of whether we're talking about Forex or whether we're talking about equities, commodities, as a matter of fact, let's expand our discussion and talk about real estate. How in the world can we know if this is fair value for a property or a home that we wish to buy, or even a car? Well, certainly one of the things that is very common is to look at comparables. What did other people pay? What were other individuals willing to pay for something comparable to the property that I'm interested in buying? So really, value is a market-driven concept, and it is identified or created by market participants. The dictionary gives us a formal definition of value, and it defines it as the material or monetary worth of something. Value. Its worth. Well, different things have different value to different people, and that is also very true in the market. And I talked about this a little bit in our first lesson when we discussed how different market participants may have a completely different perspective on value. Someone may see a price as a steal, someone else may think of that price as very expensive. So the concept of value is very, very important and is going to vary based on the market participant and their time frame, or the time element that they are looking at in the auction. So it is very important to be in tune with where value is relative to your time frame and your trading strategies. Value is the price level where most people are willing to transact. Everybody is looking for fair value, and that price level where both buyer and seller have a perception of fairness is where you are going to see the greatest level of transactions take place, be it in the financial markets, be it in a real estate market, car market, whatever market that you're looking at. the value is going to be the area where the majority of market participants are willing to transact at that level. There are always participants that are willing to transact outside that level for whatever reason, but for the most part, that is where we tend to find fair value, in the area of greatest transaction for the market where we are participating. Value, the perception of value, creates a balance between the sellers and the buyers. There are enough buyers willing to buy at what the sellers are asking at that particular level. So there's a enough demand for the supply on the market, and therefore we begin to see a creation of balance and value. And we took a look together in our first lesson and what that actually looks like on a profile chart. We could actually see balance in the market, and we could see imbalance in the market. Now, it is very, very important to be able to identify value in any market that you trade. Imagine if you went to buy a piece of property and you had no idea what the value of the properties in that area was, and somebody asked for an outrageous price, and you thought, well, you don't know any better. You agree to the transaction. You end up losing a lot of money. And vice versa. You could lose on a great deal. The value is offered, or the price that's offered is very low, much below the actual market value, and you walk away from the deal. So you lost money on that deal. So being able to identify value is very, very important for anyone engaging in any kind of transaction. Most of all, it is crucial for a trader. And you noticed how all of the charts that we looked at before don't even address the issue. There's no mention of it. Looking at a candle or bar, whatever chart you want to look at, you simply are not going to find any other charting method that actually begins to look at a way to identify value in the market. There is a much greater probability of success when an individual has an understanding of market value and where prices are moving relative to the market if they want to be a trader. So you want to know where value is currently, and you want to know where prices are relative to that value, and you also want to develop the skill of being able to identify where value is going. And we will certainly address all of these variables. All right, so if we go back to our home example, if we wanted to look at a market and we wanted to know if a home is priced reasonably or not, and someone offers us the home for this area for about let's say $460,000, and we see this diagram before us, which is a normal distribution. So this tells us, let me grab my highlighter again. I'm going to use the pen. All right, this tells us that here we had about 7 or 8 homes sell at $225. So this was a steal, whoever managed to buy it, because the majority of the homes, if you take a look here, 45 of them were sold at around $450. So if you picked something up at $225, that was a good deal. At the same time, we had about, let's say 12 sell up here at about 800 grand. Yet the bulk of the sales are, actually I should have drawn it up here in this area right here. This is the vast majority, somewhere between 300 to let's say 520, 530. This is the zone of greatest activity. This is the area where Most of the buyers are willing to transact with the sellers. This is where the action is. This is where the market has balance. Enough buyers willing to buy. Here, it'll be expensive, so there's some people willing to buy there. Perhaps it's a need, or there's some sort of an odd demand. They're willing to pay that much, and there are some that for some reason are able to pick it up much lower. But these are on the fringes. This is the core activity. All right, and this is the fairest of them all. So if you manage to get the home around 450, around 460, you've done pretty good. You're right. You're right at the heart of fair value. Now, let's talk a little bit about what is this bell curve and this normal distribution concept, because this is really at the core of the profile. What the profile does is it takes market data, just as we did with the data on the selling of homes, and begins to organize it in a normal distribution. It looks at both time price opportunities, in other words, points in time that the market comes to visit a particular price, how many times it comes there, and it looks at volume distribution. So by looking at the activity, it gives us an idea of the nature of the curve, the profile of the distribution. And this is very helpful for us when we see the distribution, because as we have just learned, the bulk of activity will take place within this range of the distribution, of any normal distribution. And if you take a look, this is our mean, 34.1% this way, 34.1% this way. That's about 68.2. So this is 68.2% of all activity. Let's round up to 70%, just to make it easy. And that's exactly what the profile does. It shows us, identifies for us the price range where 70% of the activity in the market is taking place. Now, when price starts to deviate this way or deviate that way, one of two things is going to happen. It is going to come back to value because it was not accepted at these levels up here, or it is going to continue to move in that direction, and all value, this whole market value, will end up moving to a different area. That is, in a nutshell, the idea behind the profile. And it's really an ingenious way to look at market data. Now, when we get market data for TPOs, it is very accurate for the Forex market. It is the bid and ask numbers that are the least accurate because we don't have a central exchange. However, for any other instrument that is traded on a central exchange, you will get this data very, very accurately for whatever instrument you're looking at. All right. So if, in fact, we have all this data, as we do in this case, we have a profile in front of us, and the profile shows us where the open is for the session. And once again, this is a session of the Euro US dollar. It is a 24-hour session for the full, so this includes the London session, the Tokyo session, Asia, Europe, and the US markets all together, all 24 hours together. And here is the session open, and the open is always denoted by a small circle and the period capital A. Now, let's look at the overall picture first, and then we will look at the detail of the profile. Now remember, all of these letters are known as TPOs, time price opportunities. And whenever we create a profile, we need to set a period for our TPOs, meaning we want to look at TPOs within a 5-minute period, 10-minute, 20-minute, 30-minute, 1 hour, 2 hours, 5 hours, 10 hours. We have to create those settings when we look at the profile. The default for the profile is 30 minutes, and so I have left that setting intact for this 24-hour profile. So each of the periods that we are looking at is a 30-minute period. So in other words, here you see the letter A, and there are 4 TPOs within this letter A. Just 4 of them. All right. That means that during that entire 30-minute period, the only 4 prices that were available to transact at were from 1.2699 down to 1.2696. That's pretty much it. 96, then 1.2. It opened at 1.2700. So that is the entire range right here. This little area there. Then we go on to period B, and I'll show you this in greater detail. And then we continue on. We begin with all capital letters, and then we go to small letters because there are so many periods within the 24-hour session. But what I want to highlight here, since we are going to be talking about value, is first of all, where is our value area? And this is automatically identified for us by the chart. We do not have to do any math. We don't have to bring out any tools to draw a diagram or anything like that. It looks at the data, calculates for us the value area. So right away, when I see the value area outlined for me, I know that in here, during this session, we had what? 70% of the trading activity. 70%. So this is where all the action was in this range. And notice it highlights it for us. You can choose different colors, but it highlights for you the range for the session that constituted the value area. Anything above here, above the value, we call above value. Anything below here is below value. Now, let's take a look at some other important terms we should know. A value area high and a value area low. This is my value area high, and this is my value area low, since prices moved higher. And how do I know that prices moved higher? Well, this is where we ended up closing, if you notice. Plus, notice the big capital letters are all down here, and then we end up with small letters in the alphabet up here at the top. So again, here's our open, value area low, value area high. These are all time-based. Very important distinction, meaning that each 30 minutes we had a time print TPO at each of those price levels. So it does not look at volume at all. It strictly looks at activity. So this value area is based on activity, the prices that the auction visited during the session. All the different prices, how many times were each of these prices visited. Now, there is another very important concept, the point of control, and that is the point where we had the greatest activity, or greatest market visits in this case, because this is not volume based, this is based on market coming to visit. So market activity coming to visit this price level. So 1.2698 was the price that was visited the most frequently, the most times during the session. So let's take a look here and count together how many times it was visited. I see A, B, D, E, F. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. That price was visited 19 times during the session. So this 1.2698 price level was in fact visited 19 times throughout 19 30-minute periods, 19 different 30-minute periods. When the profile prints a letter at a price for a TPO, it only prints a single letter for each period. So it may visit that price more than once within the same 30-minute period, but it will only print a single letter. So when you see 19 TPOs at a particular price, know that that means that price was visited for during 19 different 30-minute periods. Now, if this was a 1 hour, 60-minute chart, the number of TPOs will vary because it will just depend on how many of those periods that were 60-minute periods ended up touching this same price level. But for the 30-minute profile, we have 19. And as a result, this gives us our point of control. All right, and the point of control tells us that this is really the area, or the price level, not the area, the price level where the market found or visited for greatest number of activities, greatest number of TPOs during the session. And that becomes an important line in the sand, as you will see when we begin to look at different profiles together. That is an important level that one should keep an eye on, and that is why I am highlighting it for you. All right, now we're going to switch gears. We've been talking about time, and I'm going to talk about volume-based value area. We already talked about our time-based, based on activity, and this was the time-based value area. Now, I'm going to change my highlighter color, and I am going to pick blue, and then we're going to highlight the volume-based area. It corresponds to this blue arrow here. This is my value area low based on volume, value area high. So what does that mean? That means that in this area here, 70% of the volume was traded. 70% of the volume. Here it was 70% of the activity, visits. Here it was volume. So obviously the volume value area shifted higher than the time. It is above it. And also as a consequence of that, notice we have a new volume point of control up here. This is the volume-based value area, which I highlighted. I'm highlighting it here to further demonstrate how it does not coincide with the time value area. Now, mind you, that is not always the case on all profiles. There are many times when the two of them are in perfect alignment. Does that mean anything? No, it just tells us something about market activity. Does that mean anything? Generally speaking, yes, it does, but it doesn't mean that I can discern from it potential market direction. I just know that there's not an alignment between the activity and the volume-based value value areas. Now, let's see where our volume point of control is. Notice my volume point of control is up there at the top, right here. This is it, right here. And it has fewer TPOs. But at this price level up here, the 1.2743, this is the price level that saw the greatest amount of volume traded throughout these periods. So during the whole day, if I were to ask you for the 24-hour period, what price level had the greatest traded volume, you would immediately tell me 1.2743. That's the greatest level of volume that exchanged hands. And then what price level saw the greatest activity? Well, 1.2698. Now, the interesting thing here is there is a misalignment between the volume and the visits or the activity. One of two things is going to happen. Either the activity is going to jump up and sort of meet the volume where we have a new distribution up here, or if this is selling volume, the selling volume will push lower prices, and then we will begin to see the volume also drop to this area down here. So we cannot tell really what the outcome will be, but we know that there's an imbalance between the two of them. And there are a number of other things that we have to look at to begin to try to determine or to get some additional clues, if you will, about potential direction. Now, take a look with me at all of these things that we've discussed. Would you be able to identify any of those things from this candle? This is the candle, the shape of the candle and the look of the candle for this exact profile. This is you're looking at two images of the same exact trading session. 24 hours here, 24 hours here. Which do you think gives you a lot more information? Absolutely the profile. And when you begin to see how we can apply and utilize this information, you begin to see the power and the strength over the candlesticks and the other charts. I mean, just take a look. Where's value here? What happened? Here, I can also tell a lot about the auction and how the market auctioned. And to do that, I am going to change the look of the profile a little bit for you. This is the same exact profile that we were looking at, except now I've toggled it into a split profile. So rather than a compressed image as you saw in the prior slide here, I'm going to look at the lower half of the profile first. Notice how the data is all compressed together, giving us this distribution in this area, and then another higher distribution there. I am going to spread out, or we are going to look at what is known as a split profile. Now, not all platforms have the ability to give you a split profile, but certainly Market Delta and Investor RT both have that capability. Now, let's take a look at the detail that we can discern from the profile. Now we are really going to look at it closely. Remember, it opened right here, and we looked at the open before, this little O. Remember the 4 pips below the open? All right. that was the first 30-minute, first half hour when we opened. Then what happened the second half hour? B opened here. See the little circle for B period, this next 30 minutes. And then it dropped 1, popped back up 3 to the open, and we really stayed in the same range. So for a whole hour, we were just between these 1, 2, 3, 4, 5 pips for the whole open hour. Now, C period comes along, and what happens? It opens, so we were down here towards the end of the first hour, opens here, and then goes 1 below, 1 above. So we continue to trade there for half an hour within those 3 pips. That's about it. And then period D opens lower yet, and then it begins to trade 1, 2, 3, 4, all the way back up here. If you follow those 30 minutes, you begin to think, well, maybe we're going to drop lower. But take a look at what happens in period E. Period E does not go lower and does not go higher. It really mimics exactly what happened in period D. And then what happens in period F? We open here at the low, and then it pops back up again. So we now have A, B, C, D, E, and F. 6 different periods. Well, 6 different periods of 30 minutes each. That's 3 hours of activity. 3 hours of activity, 180 minutes. And look at how narrow the range on there was. What does that tell me right away? Well, it tells me that there are really no heavyweights in the market. No one here has done anything to initiate any major market moves. We're really sort of stagnating. This is a very narrow range, no movement, and this sometimes will happen in in even some of the active pairs in Forex. We end up in a sort of a rut, and we stay until somebody comes along and decides to put some muscle behind it, and the prices either take off or break down. So this was my low for the 3-hour period, and this was my high. And notice how I put a colored box around it to sort of show what is going to happen in the next period. In this first rotation for the first 3 hours, we created lower lows. But notice what happened here. We actually begin to see support, DEO, 3 different periods that were unable. They tried to test this level but did not penetrate it. So obviously there was some buyer here that was interested, and yet it was not a strong buyer, because while prices did not continue to drop, it didn't take them much further up. So now you begin to see and appreciate the information that you have. So you're able to discern, we have a level of support here, and you're able to discern the strength of the support. This is a rather weak support, if you will. It was tested 3 times, but then it held, but it didn't really shoot much higher. So if we were buying in very large volume, we would have expected period F, D, E to shoot higher. It didn't. Now, period G comes along and opens up here. And for the first time, it breaks the range of the prior 3 hours, period G. All right, now we need to watch what happens in period H. Period H drops lower, takes out the low of period G in this half hour, but it does not take out the low of period F. So this low, this support, is still holding. I comes along, same thing. So I now takes out the high of H. We're not going to talk strategy, we're talking analysis right now. So don't be thinking, where do I get in and how do I grab a few pips here and there? Not yet. This is the time when we are really looking at the auction and trying to understand what is happening in the auction. And believe it or not, once you begin to understand that, it will almost be self-explanatory where to get in and where to go, where to exit the trade, and where to put your risk management, your stop loss. So period I, again, creates a higher low, but also takes us to a new higher high. GHI, so that's 30, 30, 60, 90 minutes. And then J comes along, and there's an inside period. So this auction, we can't go higher, and we really don't go lower, but we're still there. And if anything, we see that we made a higher low than we had in the past. So when J closes, if I had a bias, it should be bullish, because it really did not take out any lows. And sure enough, period K goes up. But again, these are 30-minute movements, and the market is really moving very, very slowly. So if you notice, all the way from here, 1.2692, all the way to up here to 1.2711 or 1.2712, that range is a narrow range as far as forex. That's not a big move by any stretch of the imagination, given the fact that we are looking at a number of hours here. 693. So we're looking at about 17, 18 pips for this whole move up. So let's take a look here at the next deal. The market takes us on an up rotation. See, no more lower lows. So the range expands up or expands higher in this next rotation. We create a higher low, and this low is tested twice. Notice 1, 2. Now, the more times a high or a low are tested and it holds, the stronger that level of support. So technically, 1, 2, 3, we have 3 here, 2 more here. That seems to be holding pretty good. But remember, these are 30-minute periods, so it's not, it's sort of not that strong. But nevertheless, it was tested twice, because if these were hours, this would just be one test, and so on. Anytime you are getting data from a higher or larger time frame, the data is stronger, more reliable. And 30 minutes, as far as the forex market is concerned, is really that is the tiniest time frame I like to look at. The other data often is just too noisy, and as you saw here, there are many times when there aren't many opportunities, because the market will trade in a very tight, very narrow range. So let us highlight this next rotation higher. And one of the best ways to highlight it, to show the periods involved, I find, is to draw a rectangle around it like this. So our next area that we're looking at, or the next rotation, G, H, I, J, K, and L. 6 periods. I wanted to make it equal to the prior period that we looked at. So the first 6, and this is the next 6. And what did we do in those 6? We moved higher. All right. Now, does that mean that we will continue to move higher forever? Well, obviously, of course not. And you already see on the chart what happened in the next rotation. Ultimately, when we study the various rotations, we begin to get some insight about what is likely to continue to happen in the market. So what happens now when in this next rotation we actually have a higher high and a higher low, but look at period V where it closes. It closes down here. So would you be bullish or would you be bearish at this point? Definitely bullish, because first high, first low, higher low, third low that's higher, period V closes, period W opens. We've come a little bit lower, back again towards the price point of control, the activity, and the market is really coming back to revisit this area because it's perceived as the fairest price. So the market has come back to it. It deviated away from it and has come back to it. Now, sure enough, you would have been able to get a few pips if you were long at this point once W opened and you decided to take a long. And so let's say you got in somewhere here, you could have taken a few pips out if you're scalping. I certainly would not use this as a long-term entry, and certainly would not use the 30-minute chart for that, but as a scalping chart. And you have to make sure also you are safe on the spreads to be able to enter and exit with a little bit of profit. But more importantly, let's go on to the next rotation. So we have rotation 1, rotation 2, rotation 3. And let's take a look at what happens now. W goes right up, and then we've got X, Y, Z, and Z gives us a zinger, a real surprise, and pushes us quite a bit lower and takes us even lower than the point of control. A couple of things I want to point out to you here. Z closes right at this level. Now notice, first of all, the capital letters A to Z are the first 24 periods. So this is period A, which is the 25th period in the session, small letter. All right, and it opens down here, and it too continues lower. Period B also continues lower yet. So down here, when period B continues lower, somebody may get bearish, and sure enough, it's conceivable prices could continue to move lower. But instead, look at what prices do. They come back to this area, back to this level that really has proven it has been acceptable for over the 24 periods. It's obviously was the point of control at that point of time. So what does price really like to do? It often likes to return to value. When it doesn't return to value, it begins to explore price range for new value, new location for value. But the value concept is very important because of how price reacts to it. So now price pops back up to value, and the key question that we have to ask ourselves, what does it do when it comes back to value? Does it begin to just rotate within a very tight range, or does it find rejection and it starts to spill and drop lower, indicating that the market is going to continue to move lower? Does neither of those things. On the other hand, what it really does is it starts to take off. And notice period F, period G creates a higher high, and take a look at H now. Now you are beginning to see the involvement of major players. Major players have stepped into the market. These kinds of moves do not happen haphazard and do not happen by individual participants. These are central banks. Notice now, when they put some muscle behind this, or a better word really would be some major capital, what happens? So we begin to see signs of a strong buyer and a push higher. It's important to understand what the auction did before it auctioned higher. It actually auctioned lower. And more importantly, it took out the prior low. Notice Z, A, B, C, and D. But when D comes back for a retest of the low, notice the buyer picked it right up, and we've got what we call a single print right here. See these 4 letters here, nothing else in front of them? This is an indication that there was a responsive buyer here. Somebody responded to the prices, picked them right up, and every time they came into this zone, they were willing to buy immediately. They thought this was a steal. So in some respects, this was rejection of these prices moving lower, and somebody responded and started buying right away. They felt this was a good level to start buying at, and sure enough, they continued their buying. Now, notice when they began to put some capital behind the buying. Take a look at the letter H, and the explosive move higher after this responsive buying activity. Take a look at that. This was, look at that. Now, I told you there would be a time when we would discuss potential entries and so on. Naturally, if you saw this rotation, we try to move higher, come back down, go back up, go down a little bit lower, but then come back up to make a higher high than where we were before. You should enter right here. This is a very good point to trade. This shows in the auction now I have a major participant picked it up at this low and was able to take it even higher than the prior high from this low, and you could ride that nice wave higher, and it continued higher. Now, another thing that I would like to draw your attention to, we talked about the buying tail down here. Okay. See the letter B? This is what we call a buying tail. In this case, it's a small buying tail. Now, here we had 1, 2, 3, 4, 5, 6, and they immediately take out the high of this prior high from letter X and continues on. It's kind of interesting when K comes down for a retest, this high holds. Notice the level right there. See that? You see it so clearly on the profile when we do a split profile like that. And so K drops back and it doesn't get any lower than this high. That's another very bullish sign, and sure enough, L, M, N, P, Q, R, S, T, U, V, W, X, and this is where we end up closing the day. So there's still a bullish sentiment, but there's obviously also a bearish sentiment in the market. So when this major player came in, this responsive buying activity by a central bank, it pushed prices higher and moved the range, extended the range to the upside. What happened with it also is it began to move value higher because more and more people were willing to transact in a new price range. Remember, this was the area that was visited, what did we say, 19 times? Now we are in another area and we're starting to see TPOs begin to accumulate. So up here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So it looks like I have 12 there. I think I may even have 12 here. So there are 12 different prices. And then we end up closing down here. Very, very interesting development in terms of where the close is relative to the activity. if you notice, I came down only to this low, not as low as where K was. So this area seems to still have some buying support here. When prices come down, they're picked up again. See, JKI, LMN were way up here, and then we're rotating closer and closer around this new point of control. So when the buyer came in, the buyer managed to push and move value higher. But at the same time, we also saw rejection of these high price levels. Now, how did we see that rejection? We see a selling tail. See period I, when it tried to penetrate into this zone, it came right back down, right back down. Okay, notice where J opens. J opens down here. So I was rejected, and more importantly, nobody ever came back to retest that. So the seller was strong enough to keep them at bay, and prices didn't pop back up beyond this level here, level N. So we have a buyer here, and we have a seller there. and value is going to be somewhere here until one of them overtakes the other. This is the story of the auction for this particular session. Remember also that this is the volume point of control, so the greatest level of activity was up here, because the greatest level of exchange of volume was up here. Greatest level of activity was down here. Need to make sure I clearly identify the distinction. This is the volume point of control up here, and this is the activity point of control. So here we have a lot of volume being traded back and forth. So we have two major players handing off to one another. You always have to keep in mind, big volume in terms of selling requires a big buyer to be able to absorb all that volume. So that's heavy participation from both buyer and seller. And this is what creates the equilibrium, or the balance, if you will. So we ended up with what we would call a double distribution for the session. We had a distribution in this low range, and then it popped up. Another description that we often give this type of a structure or day session is a B, as in boy, B-shaped distribution, because we get a double distribution to the upside. Now, I don't want you to be fooled by virtue of the fact that our session closed lower. This still was a bullish session, and at this juncture, the buyer still has the momentum on their side. After all, just think about it. The buyer managed to push value up here, and we began to distribute around a higher price. So the buyer really had the momentum on their side, but they've encountered some selling. Now, is this seller strong enough to overtake this buyer and push prices lower? That is a distinct possibility. But at the close, we have to monitor what's going to happen in the next session, and whether this area of buying is going to hold or not. It's probably going to get retested. And the same thing, if the buyer continues to buy, that high will also get a retest. As a matter of fact, this is kind of a weak high because it dropped down very, very quickly and was never tested again. So it is likely to get tested. Remember, the more a price level is tested and proves its endurance, if you will, as support or resistance, the stronger that level is in terms of a level support or resistance. So we did test here. We explored once and we got rejected, but the market is pretty tenacious, and then these buyers have a lot of capital. They could easily push things back higher for a retest. Our job is not to predict. We don't know what they will do, but our job is to look at what are the potential outcomes and what needs to happen for each of those outcomes. And then as I begin to observe the market activity in action and the profile develop, I know, for instance, if we start to come back up for a retest here, and we take out the high and we go a little bit higher, then definitely that buyer is still dominant and the trade would be to the upside. However, if I begin to see this buyer break down and we come back for a retest of this value area down here, then the seller has overtaken the buyer and the buyer doesn't have the momentum anymore. This is what the analysis helps me to do. Understand what's going on in the market and develop my trading strategy in accordance with the developments that are happening in the market so that I am on the right side of the market. Once again, I'm going to present you with my profile chart and a candlestick. Look at all the things that we learned, all the things that we were able to discern. Those auction rotations, the participants that came in, where the rejection was, the key levels, and we will hone those skills as we progress with our lessons. All right, with that I will conclude our second lesson and look forward to seeing you in the third one.